Hi everyone. So today we're going to be looking at, the statement of profit and loss. Okay, the very first one, the first horseman of the apocalypse. So here's an example of a statement and loss. So at the title we have year end for the year ended 31st December 2020. Okay, so 2020 we have here and 2019. Now remember that profit is the same as income minus expenses. So the statement of profit and loss is showing us our income less our expenses. And I'll go through the different headings now. So the first heading we have is revenue. And that's income directly related to trading. So if you're a candy shop business, your revenue will be from the sales of candy bars. Okay, the next heading we have is cost of sales, which are shown here. Now, cost of sales are a type of expense, and they're costs directly related to the sales. Okay, so it could be purchase of inventory, or in businesses where you're employing sellers, any commissions that you pay to the sellers. So sellers are often paid a percentage commission based on how many items or how much they're selling. Okay, so we expect cost of sales to move in line with revenue generally. The next heading we have is admin expenses, and these are general business costs, so rent, rates, and salaries of staff. In a business, you don't just have staff who are, generating the revenue. You also have support staff like IT, the accounting team, human resources, and those amounts go in here. So generally, admin expenses include, most of them will generally be, for many businesses, the majority of expense will be staff expenses. Below that we have finance costs. Finance costs are normally interest expense on loans, so the costs of financing the business. Loans are a way of financing your business. So if you borrow money, you can use that to finance your operations. We then have tax, which is hopefully not too taxing to understand. That's basically you're charged tax based on your profits for tax purposes, which we call taxable profits. And there's a complicated calculation for us that needs to be done to do that. But you'll cover that if you're learning tax. We also present prior year results as well, and we can use that to do a bit of analysis, which we're going to do on the next slide. So let's analyze further what's going on with this business. So revenues increased only by marginally, I think 1.2%. Now, gross profit, I haven't mentioned gross profit. This is revenue minus cost of sales, and a good figure to do is the gross profit margin, which is gross profit divided by revenue. Now, for this business, we're seeing a decrease from 88% to 73%. I'd normally expect a GPM, if the business hasn't changed, a GPM to be similar, gross profit margin to be similar. So it'd be interesting to understand what's causing such a sharp increase in cost of sales. Now, another figure to look at is admin expenses. So admin expenses are normally quite fixed, have quite a large proportion of them are fixed costs, like your staff salaries, your rates, and they don't necessarily move in line with revenue, but it's good to compare them. Now for this company, we're seeing a massive increase of 11%, and the increase is faster than revenue. So for both of these costs, you can't really tell much. We have to get further breakdowns for both years and do a full comparison to understand what's going on. Okay, so generally, the financial statements don't give you the full picture. Any other points? Well, our operating loss, we're making an operating loss of 903k, but last year we were making an operating profit. So the operating loss, as we discussed before, is driven by a reduced gross profit margin. Do you see that cost of sales are more than doubled, I think? And admin expenses have risen faster than revenue, okay? I think finance costs are a bit negligible. they're below 10k, so I don't really care too much about them. And the company doesn't seem to be paying any tax. Historically, that seems to be the case anyway. And as you can see, the performance appears to be worse than last year because it's making a loss. So let's look at a few more ratios. These are just to give you an idea of what ratios you can use when analyzing a business. So there's one called interest cover, and that's equal to profit from operations divided by interest. Okay, so showing how well your profit is covering your interest. If this is less than 1, then the business might be in trouble because it's not adequately covering the interest payments on loans. If it can't even meet the interest payments on loans, then it's unlikely to be able to repay the actual loans. Okay. Is there another one I've put down? Oh, and the other one is operating profit margin. So that's operating profit divided by revenue. I will say that it's good to look at admin expenses in isolation because your operating profit margin is driven by the gross profit margin as well. Okay, so it's good to look at admin expenses in isolation, I'd say. And I didn't bother looking at that in the previous slide because, as you can see, the company was loss-making for this year. So I guess to summarize, we've covered the different state lines in the statement of profit and loss, and for your ICW exams, if you're doing those, it's good to learn them. You generally can't tell that much from a statement of profit and loss, if I'm honest. You have to do further research. And I think the frustration for me is that it's prepared on an accruals basis mainly. So you're not actually seeing how much money the business is earning. Okay, that's all from me, guys. Hope that was useful, and keep in touch.